That time was when Harshad Mehta was on the cover of some magazine. I can't remember which one it was. Business
Time
Today,
magazine.
Business World. One of the magazines, okay? I remember seeing it and I asking my dad, oh, he's a stockbroker or whatever it was, and I want to be a stockbroker. It sounds very interesting.
तो कई लोग मुझसे पूछते हैं कि उनको एक बड़े फाइनेंस हाउस में काम करना है. फॉर दैट वी हैव अ वेरी स्पेशल गेस्ट टुडे. शी हैज वर्कड इन मल्टीपल वेल्थ मैनेजमेंट फर्म्स अक्रॉस द वर्ल्ड and she has even headed the Asia Pacific part of it. She is actually named as LinkedIn Power Profile and Top Voices for the year of 2017, 2018 and 2020. And she is one of the initial women in India to get a CFA charter. I am talking about none other than Hansi Mehrotra. Thank you, Hansi ma'am, for joining us and giving your time from your busy schedule, because I know for a fact that the knowledge you will be giving me and my audience will be amazing. Thank you so much for being a part of this conversation.
Pleasure to be here. Good to be here.
So ma'am, I was going through your bio and a very interesting thing which I found, that you actually started off from a Hindi medium school from a small town and ultimately went on into a wealth management firm in Sydney. So tell me more about this particular journey, because it's very interesting. In fact, it's very inspiring also. And what was your childhood like, and few things you want to share?
Okay, so let me start with this small town that I'm from. It's called Unnao. It was in the news very recently, where I think they're talking about Miaganj ko Mayaganj banana hai and all that stuff. It was also in the news a couple of years ago for not so good sort of headlines. There was a rape case, in fact. The picture I'm trying to paint you is, it's a very small town between Kanpur and Lucknow. And how I ended up there is because my dad is from there. So he went to a Hindi medium college there. Then he managed to get out of India. He managed to do well, and then he lost everything. And my parents split, slightly dysfunctional family, and we were brought back to India. So we were brought there, and we were living with our dadi. When I say we, my brother and I, without our parents, okay, just with our dadi. So that's where we were. And there was one token English medium school. But I know, if you know, in small towns, they say English medium, but basically textbooks are in English, but padhai Hindi mein hoti hai, right? So they don't really, they call it science, but whatever. But then I was a good student, and my brother was not doing so well. So I was encouraged to basically jump a couple of years by giving the year 10 exam UP board with him, because he needed to jump 1 year, so I needed to jump 2 years. And I managed to get distinctions and stuff. And then the problem was, my school, this little school in this small town, didn't have a year 11. So that's how I found myself in this year 11, year 12 in a Hindi medium, all girls school, where we had to wear like kurta and marwa laga ke, that dupatta with canvas shoes. And I was like crying. It's like, where have I come to? So I studied Arthashastra, which is economics in Hindi, and education, and I did fine arts. Okay, so basically I was a through and through arts. I became an art student, even though I wanted to be a neurosurgeon. Then, complicated thing, I actually did study for science as well. Again, Hindi medium, and sat for the physics, chemistry, biology exam. Again, got distinctions, and found myself in pre-med. And that's when my dad fell sick, and life changed yet again. But anyway, so that's where I was. I actually had no plan to be in finance. I wanted to be a neurosurgeon. My fascination was with the human brain. कि ये दिमाग कैसे काम करता है. This is the most fascinating thing. It's because my dad fell sick, and then I had to finish, or rather not. I didn't go to college. I'll tell you that story. But anyway, so that was how I...
So why finance? I mean, from medical school to finance. Why finance? Why not something else?
Yeah. So I had done economics, okay? Because I jumped these years and economics was an easy subject, I had done Arthashastra, right? So when I was doing this medicine ka study, my dad fell sick, and I knew that I couldn't go back to Lucknow to take up the college. I had to basically do BA pass, and the only, again, easy subjects were English literature and economics. So economics was always there as the easy subject that I know I could pass, and I did quite like it. To be fair, I did really like it. That time was when Harshad Mehta was on the cover of some magazine. I can't remember which one it was. Business
Time
Today,
magazine.
Business World. One of the magazines, okay? I remember seeing it, and I asking my dad, oh, he's a stockbroker or whatever it was, and I want to be a stockbroker. It sounds very interesting because there's money and numbers, and not so much numbers as much as the fascination for, just like you guys are all interested, every millennial today is interested in the market. Back then, I was the 20-year-old, 19-year-old fascinated by the market, and it's like, meko market karna hai. And interestingly, my dad, very progressive guy that he said, you can do anything in the world. But in finance, he said, yeah, stockbroking, it's no place for girls. Because it was an open outcry method, right? You had to go into the ring and actually go and do this. So that was the one thing he said that don't do. Do everything else. Do lawyer, do this, do that. And because he said no, I said, abhi to mereko yahi karna hai. Okay, now I want to do this only because my dad said no. So that was the thing about finance. Nothing more than basically Harshad Mehta being on the cover and it sounding interesting. And economics was something that I liked.
Makes sense.
That was it.
So how was the transition? How did you make sure that, or let's say, how did you visualize yourself actually working in a wealth management firm, that too in Sydney?
Okay, so I didn't know what wealth management was. There was no wealth management. Okay, so firstly, that was the fascination of wanting to be in finance. My father passed away, and as luck would have it, I was able to migrate to Australia more on a family visa. Now I landed there, but I had no money, so I had to work as a waitress. And started asking around people what they could do. And my mother was a financial advisor. So she's like, finance could be interesting. And more importantly, there's no degree to get in. So your BA pass bhi chalega. So long as you can sell, you can get a job.
I'm sorry to interrupt, but it's very different for the current thing, because I feel that in the finance, if you want to get in there, so probably you need little more degrees, little more certifications to get.
Yes and no. In many markets, actually, only recently did SEBI put in the postgrad and stuff. Okay, so even 10 years ago, there wasn't that requirement. And even in Australia, only 10, 15 years ago. So actually back then, BA pass would get you in, was the thinking. So long as you need to sell. Now, so therefore I went and got a job, but the job was not really a salaried job. It was basically a commission job, which is what you people would be offered today if you were to go and ask any financial institution. You'd be taken in as a salesperson. Right? That's what I did. I joined as a salesperson. Ki mereko seekhna hai. And so during the day, I would sit in their office. They would give me a phone list. And I would have to start calling people and making appointments and getting them into the office. The condition was कि आपको finance नहीं मालूम है, you're fresh off the boat, English नहीं आती है, थोड़ा सीख लो पहले. So you won't be allowed to give advice in verbally, but you can give it in writing, which is basically we will help you draft it. So I thought it was free training for me, and for me to really practice everything: finance, English, dealing with people. I could go to free conferences. Not only was the breakfast free, but the free gyan bhi bat raha tha, so I could go to that also. So basically, I figured 2 years I did that, and I joined a postgrad diploma in applied finance and investments. Okay, it was a very interesting sort of, not degree, but a diploma where there were no professors. This was an industry association where they would give you a very thin textbook and they would give you sort of topical articles to read. And then there would be someone from the industry taking a lecture in the evenings in one of the offices. So this was a very much an industry undertaking, which I thought was fascinating. So I started attending that. And in the first lecture there was a stockbroker. So I walked up to him and I said, okay, very good lecture. And I want to ask you a question. He said, kya hai? I said, okay, I want to be a stockbroker, but I don't know what they do. So he had a hearty laugh and he said, Monday ko office aana. So I went to his office and that's when he or his staff told me what stockbrokers do. And that's when I had a real idea. And that's when I studied the thing. So during the day I was working. Friday, Saturday nights I was working as a waitress. And in the evenings I was studying. So basically that's how I did that for 2 years. No salary, just the waitressing income. And only when I passed that, got distinctions, then I knew, okay, ab meko finance industry mein hi karna hai. And then I joined a research firm, which was a supplier to the financial planning company that I was working for. So that's how I got into the industry.
That's quite a journey. So ma'am, tell me one thing, one specific thing or one interesting story or some learning you had when you were in the sales part of your own journey.
I think people think sales is a dirty word. Whereas I think you're selling yourself all the time.
Sorry to interrupt, but can you just tell us, for your audience, exactly what did you sell so that they're also very clear about it?
So let me take a step back. While I was doing BA Pass by correspondence in Delhi, when my dad was not well, I had already taken a sales job. Okay, I was selling binding and laminating machines door to door to government offices and private offices in Delhi. Okay, I used to live in Munirka. and I used to sell in Okla. Okay, now वहाँ पे they wouldn't teach you sales other than ये number है, इनको call करो, meeting करो, and basically sell your product. Okay, and I learned on the job, so I had no fear of sales anymore. So when I went to Sydney, and then I was given the same not mailing list, but a phone list. अभी इन लोगों को phone करो, appointment लो. Actually, it wasn't too bad. All I had to do was convince them that they need some advice and get them into the office. And then there would be someone there in the office to help me sort of guide them. And then we got some internal sales training. We were told like how to handle objections, how to make a pitch, how to listen. Most importantly, in financial planning and consulting, sales is basically consulting in another word. So how to do all of that. So the idea was to get them into the office to sell them a financial plan. But back then, as it is here in India now, we got paid by commissions. So the client didn't have to pay us a fee, so long as that they invested according to the portfolio that we gave them. We got commissions, not only from mutual funds, but also from insurance.
All right.
That was what I was selling.
Makes sense. So that's quite an interesting thing, because I remember I also haven't gone to college. I did from correspondence from DU. I did my BCom.
Same.
And first job which I landed was a sales job in Central Bank of India. So my main thing was to call up quite a lot. So I think I've learned quite a lot there. So I can relate to your story a little bit.
Same.
So ma'am, next one is I want to go into the corporate world, and I want to see that first of all you are a CFA, you are a CFA charter holder. And probably I think that you're one of the initial few women who actually got the CFA charter holder. Correct me if I'm wrong.
I don't like being on women lists. Okay, so because it was a statement of fact, I will let it be. So I did my CFA while I was in Australia, and I wasn't the only woman there doing it. There were many others. It's just that because my passport was Indian, and now I live in India, the Indian CFA Society looked up the list of people. And I think Punita Kumar Sinha, and there's a lady who's on the Tata board, and I think me. So we are the three oldest around. I got mine in 1999, so I started in 97. But my point is that I wasn't in India at the time, and therefore I can't claim credit that I was doing something amazing that other people weren't doing. People were doing it there. So that's why I don't like being on that list. I didn't, you know what? They gave me this award, and I was so embarrassed that I didn't go to collect the award also. They had to send it to me at home because I didn't want to, I felt like a fraud to go and say that. Anyway.
Right. Yes. So ma'am, tell me one thing, that this is a very interesting thing that आजकल YouTube पर काफी होता है कि CFA आप कर लोगे but you won't get any benefits out of it for some reason. I've seen many videos ranting on CFA. There's no point paying that much money, putting that much time. So what do you think about it, or maybe how has CFA actually helped you in your own journey?
I told you after this 2 years of this distinctions and diploma, I then got a real job. Okay, I got an actual research job, and I did this project on a 3-month contract basis, and they liked my work, and that's why they made me permanent. So my first thing is you get the job not based on any qualification. It's just a door opener. You actually end up keeping the job because of the work that you do. That's my first thing. Now, when I was there, I was doing this research on all these alternative products, and this one guy who had a master's got the head of research job, and I didn't. So I went to my boss and said, usko kyun mila, mere ko kyun nahi mila? He said, Arey, but he has a master's. You are BA pass. So kuch karke dikhao types. So I asked around the industry back then in 97, I asked people in the industry, what is the hardest course you can do? And they said CFA. Pass rate is only 50%, 40 something percent. So I decided, because I'm stupid, because I like doing the hardest thing possible, ऐसे नहीं करके ऐसे करेंगे. So I went and did the CFA. But to be fair, once I started studying, I realized that what I studied in Australia was good basic principles, but it was only Australian. What the CFA gives you is a global, albeit US-centric, but a global perspective on all asset classes. So what you were doing day to day was one aspect, but the context in which you were working was good thing. So CFA is not like a master's where you go deep on a topic. You don't have a lecture, you don't have a discussion, you don't have a philosophical discussion. But what you make up, what you lose in depth, you make up in breadth. So they cover all asset classes, thoda karke, a lot of subjects. So you then come out very well rounded, and because it's the same degree, across the world, same exam, same day, same time. Any that qualification is globally accepted. So if I hire a CFA today, I know that they didn't cheat, they didn't just get the degree and honorary one or whatever. They didn't that year, whatever. It's I know that the standards were pretty standardized. So I thought कि Sydney से निकल कर मेरे को Wall Street जाना है. That is what I thinking was. So CFA, sitting in Sydney, how could I do a degree that I could then go to the US with? That's how I did the CFA, and also because it was the hardest. As luck would turn out, I never got that head of research job because I was also good in sales. Because I was good in sales and I was good in investments, or decently good at investments, I always got to be a business leader. I was given divisions to start and run, because the skill of having a research background and sales skills is very rare. So that's where I realized in life, rather than trying to be the biggest nerd and biggest CFA and biggest head of research thing, I enjoyed people, I enjoyed sales. Why don't I combine the two skill sets and be good at something that other people are not? So CFA did help in being taken seriously, and I think it still does. I think it's people who say it doesn't help. Yes, obviously everything is a function of demand and supply. So obviously if there are many more CFA charter holders around and there's fewer jobs, then obviously demand supply will be such that it won't be that valued anymore. But I think today I have interns. I have many interns and I hire analysts. Even today I'd say I would take a CFA any day over any other degree, because I know at least they've done that breadth.
Right. So ma'am, you said about demand supply, and that's a very logical thing, of course. Let's say engineering students are in huge supply, so probably the demand's also significantly lower. So what is the current situation? And tell me from the perspective of abroad and in India, because there's a consensus that in India CFA is not recognized as much as it's in abroad. So tell me a little more about it.
No, it's a catch-22. For the longest time, CFA didn't have an office here. So there wasn't much marketing in terms of what CFA is and what they do. But the last quite a few years, they've been here now. I want to say, nearly 10 years, I think they've been here. They have an office. So now there is much more recognition. Now, having said that, what jobs would you need CFA for? Anyone in the finance industry? So globally first, I think from what I've read, the finance industry may have hit peak finance, which means that in developed markets, the finance industry became almost too big, and if anything is downsizing. Okay, so they started, especially 2008 crisis, I was in it. I thought that the industry was inventing products for the sake of it, rather than solving a real need. So in other parts of the world, maybe the demand is not as high, but in India, the penetration of financial products is still very low. Do you need a CFA to sell those products? I don't think so. But the industry is still growing. How much it will grow? I think it will still grow, but maybe not enough to absorb all the CFAs. But there's one segment of the market where we don't have enough people, and that is wealth management, which is I started my career as a financial advisor, then I consult to wealth management. So we do need more wealth managers. And by wealth, I don't mean just private wealth, not just the HNI segment, but the mass segment as well. Is CFA overkill for that? A little bit. And I've been giving feedback to the CFA people as well, so that your course should be well-rounded, or maybe you should have a spin-off degree or something for wealth management. But they have adjusted their syllabus quite a bit. So if you want to, if you can't find a job, then definitely become a wealth manager. I think we have a huge supply shortage in that.
Ma'am, how about CFP? So many people actually are looking up to CFP. They've just revised their course, and I went through curriculum. I think that the curriculum has become really interesting. So for wealth management, if a person really wants to go ahead here, what would you advise him, CFA or CFP? Regarding that CFP takes significantly lower time to complete.
Well, I think if it takes lower time to complete, that means you've studied less. Okay, so you're not studying as much investments as you do many other fields. You tax and estate planning and modeling and things like that. I think both CFA and CFP are missing more on behavioral finance. Okay, so let's just take a step back. Okay, what is investments? How do you add value? You can always buy an ETF and buy and get the market return. Okay, so assuming GDP is growing, you will get market return just by buying a simple ETF. Now, how can you add value? You can either add value through better information, through better analysis, or through better behavior. Information is technology, a function of technology. Analysis is what CFA teaches you, how to be a better analyst. I think right now there is value to be added through better analysis. Going forward, however, if there's enough CFAs around and therefore it reflects it in the market price of everything that you buy, then better behavior might be a differentiator. So going forward, there will be both the financial planning profession, wealth management profession, and so on, whether it's robo advice or whether it's human advice, they will all focus on advising the individual to behave better. It's like being a nutritionist or a gym coach. It's not like you don't know what exercise to do or what to eat, right? Yet you need a coach right there to tell you, "Arey, matlab, kam khao and zyada exercise karo," right? So wealth managers will become more coaches. So it's not like your investor doesn't know what to do. You need to coach them. So I think behavioral finance and psychology of investors would become more important. At this point, I've not looked at the CFP curriculum recently. When I looked last, I wasn't impressed. I think even the investment stuff, frankly, is very light on. Very light on. Okay, so it's something as, in fact, not just CFP. Let me not single them out. Okay, most people think about what they do day to day, selecting mutual funds. Okay, and I'll discuss that because it's relevant to what I do. Selecting mutual funds is the most important thing that a wealth manager does. Okay, day to day, selecting mutual funds. I tell you, no textbook teaches you how to select mutual funds. At least CFA has a CFA Research Foundation where they attempt to look at what factors have added value, how to evolve that field, how to evolve behavioral finance. So there's, because of that research foundation, there is like a university and a textbook and university rolled into one where there is the best thinking always coming through. I don't see that happening in the CFP or in other qualifications. So I'm biased. I'm a CFA. I like my CFA. I would recommend that.
Right. I think that's great advice. So ma'am, one question which I'm constantly asked, because this particular question is one of the most frequent questions I've had. So there's a person and let's say she has just graduated from her undergrad, and you can call it like BCom honors or BA pass, whatever. And now she hasn't landed a job in any other company, and she wants to have a career in, let's say, research in, let's say, an asset management company or a wealth management company, somewhere at that point, wherever there is some kind of decision making in the investment process in those particular roles. So how would you recommend that person and which paths to take?
So we haven't even discussed what I do. So I don't know whether this should be a good time to just say that. Can I just take 2 minutes to explain that?
Yeah, please.
Yeah. Okay. So I have 2 websites. One is called themoneyhans.com, which is for beginners. Mm-hmm. And one is a site that I'm relaunching. It's called Money Management India. Right. What I'm doing is what I said, which is basically there is not enough research on fund selection. I think this is an area of the industry that not enough people pay attention to. There is some star ratings available, and I've written some articles for the CFA blog about why star ratings are not enough. So I'm doing something about it. Coming back to your question, where should someone start? I think if you can get a campus placement or apply for whenever they are hiring, great. Okay, nothing like it. The only problem is that you are now going via recruiters. With large companies especially, you have to put your CV somewhere on a site and they filter it, and you get like 30 seconds, 10 seconds to look at your resume and you're gone.
Right.
So how do you stand out? I think, as I said earlier, I think getting your degree or getting your resume right is just a foot in the door. In the end, I can't, uska achar dalenge. Like, what will I do with your resume? What will I do with your degree? I mean, I need you to work. I need you to do something. I need you to analyze. So if you say you've done a CFA or any other MBA or whatever degree you've done, frankly, doesn't matter. I need you to do research, which means collating information. So you need to know what information to collate. And then I need you to analyze it. I think, and this is how I've managed my career, is I need to show a future employer that I can do it. So what you need to do is ideally start making some research, whether it's on individual stocks or sectors or funds, and start publishing it. Today, you can publish a blog pretty much anywhere, right? From WordPress to Medium to Substack or whatever you want, okay? Start publishing a blog, samples of your research. Even LinkedIn, you can publish. What I'm doing the last 12 months in the pandemic, I have taken interns and I'm actually allowing them to, I'm rather not allowing them, but I'm guiding them to do just that. So with my guidance, I'm saying, okay, this is how you, so we are evaluating funds. But in the process, because they are listening to interviews with fund managers, they are listening to how to pick stocks. So even if they want to be a stock picker, you don't learn to pick stocks from a textbook. Okay. So you need to be exposed to the best investors in India and ideally globally. So you need to listen to the interviews. Nowadays, 20 years ago, we didn't have that luxury, but you guys do, where your podcast itself, right, is interviewing these smart people. All you have to do is listen to the interviews and say, okay, wo log kya karte hain, right? How is it? How can I be, I can't say how can I be smarter than them, but how can I at least learn from them, right? So what I'm making them do is go and listen to all these interviews and go and analyze and do a research sample and then put their name on it so that they can send that to future employers. And say, मैंने ये बनाया है, ये report लिखा है, here's a sample and you read it.
All right.
I think there's no substitute for making a sample of your work and actually getting it in front of people. Believe you me, I think that works. I think you can just send a link to anyone you want.
I think, ma'am, that's great advice, and I'm sure that many people would benefit from it, because this is like a constant question which I'm having. So I have one more thing that I'm sure, of course, you're in the hiring part and you do take interviews. What are the few things which you look at, or few things which you want the candidate to have, be in your team, or let's say be hired under you? Any specific points?
The single most one thing that I would look for is curiosity. Okay, curiosity to learn. Curiosity to not just, when I was a kid, it used to be like, I used to be the one person always asking questions. And I used to come first. I used to ace my exam. And even then I would put my hand up and said, but ma'am this, but ma'am that. And my teachers used to get like, oh my God, she's asking again. But as an analyst, that's a very good thing. Okay, so when you say you have written something, okay, say for example, now you've pitched to me, you've emailed me on LinkedIn, in mail karke, ye mera research sample hai, here's what I've written. Okay, and I am hiring. Now I can glance at it. Within 2-3 lines, I can make out whether you are. So for example, if you make a flippant statement about the GFC happened, the global financial crisis happened because of this. Okay, well, that's your very high level opinion. You are dismissing something as complex as that by making one simple statement. And it shows to me that you have no respect for the market. You think you know it, as opposed to, well, actually, this was a complex thing and this can be traced back to this or that and we will never know exactly. So you're showing humility enough to say, I don't understand what happened, but here's my attempt to go and dig deeper and deeper and deeper. So your curiosity should basically take you down rabbit holes. You should not, at this age, you should not make any definitive statement on anything because frankly, you don't know. Okay, and the more confident you sound in front of people like us, the more I'll say, yaar, matlab, hum log ऐवे ही बैठे हुए हैं, matlab 20 साल से 25 साल से, what do you think? So I think that curiosity to kind of saying, okay, hang on, maybe I've not understood this right. Maybe let me go deeper. So that would be one thing. Obviously, that should make you a very good reader. You should constantly be reading books. There are many smart people who have come and gone before you. Amazingly, they've written books about it. So yeah, that would be another.
Yeah, ma'am. And any few books would you recommend to any person who wants to be a research analyst, or any journals you would recommend?
Yeah. So obviously the classics would all be there. So you need to have read Ben Graham's book, The Intelligent Investor. Right now, I would say the Psychology of Money by Morgan Housel is another one, which even the layperson and an analyst should read. Both should read. There is one by Howard Marks, The Most Important Thing Illuminated. I think I would recommend that.
All three of them right here.
Hi, I can see Peter Lynch, right? I'm not the second but I think I can see Peter Lynch. Yeah.
First one is
so all
Peter
of those
Lynch,
ones.
and this one is by Howard
The
Marks.
Most Important Thing. Yeah. So these are books that everyone should read. But I also think that to keep up to speed, amazingly, even though I pay membership fee, I think all the CFA material should be available only to members. But amazingly, a lot of it is available for free to anyone. Okay, so I feel a little bit cheated. But technically, I write for the CFA Enterprising blog, and the Enterprising blog is available to anyone. So you should be reading that. There are a bunch of people on Twitter who are amazing. Okay, the FinTwit, it's called, right? There's some amazing people you should follow. So anything they write or anything they produce in terms of podcasts or videos, or they write newsletters where they recommend every week. So every Sunday, I get 3-4 newsletters, and all my Sunday goes in simply reading those newsletters, whatever links. And that goes down a deep rabbit hole. Like literally every Sunday, don't bother me, and I'm doing that. So if at this age, I'm not old, but I've been in the market, I should say, 28 years. So long enough that if I'm reading, then you too definitely should be reading.
Exactly. Yes, ma'am, I think this is another, of course, this is a very important point because nowadays, actually, I've seen that many people who are in their early 20s, they're pretty confident about stock markets, they take high leverages and things go south just from there only. So, yeah, so be a learner and be curious. Yeah, right. So this is a great thing to keep in mind. So, ma'am, next question is, and I'll be straight up, and this might be the most commonly asked question throughout right now. Do you think that the markets are overvalued as of now?
Understand that valuation is an opinion. It's your opinion versus mine. And I don't know that my opinion carries any weight. I am not one large investor that by me saying it, I will move the market. So frankly, how does my opinion matter? Okay, so one thing, and I teach my interns the same thing, that when you study valuation, you understand that it is simply an opinion. Whether you do a DCF, whether you do a PE, whatever. So when you say overvalued, you are doing it on the basis of some multiple, right?
Correct.
Or some DCF. Now, who is to say that is just because it happened in the past, it won't happen in the future. I get the fact that the risk premium has been this average over the last X. Now in India, by the way, I also think that people don't look back far enough, okay? Partly because the data is not available as freely. So we only look at last 10, 20, 30 years and say, bahut ho gaya. Matlab, because your lifetime is less than 30 years, you think that 30 years is enough to look.
Right.
I'm sorry, it's not. Okay, so you have to look longer. And the human brain, whether you are an American or an Indian, is the same. So don't assume that you can't learn from how American investors have reacted to things in their markets. So the human brain is the same. So see if you can understand why it should be different or why it should be the same. I think greed and fear, our brain has not changed at all. So what has changed? What has changed is the information. The internet has changed things. For example, there is a whole winner takes all type thing, which is why some of the tech stocks are so highly valued.
Correct.
Yeah. So the short answer is, I don't know. And I like saying it because frankly, I don't know. I mean, I think there's a question that you might ask me in terms of how have I invested. You can go ahead and ask that and then we can answer that.
Exactly. That is the next question I have.
I was going to say. So then that's the only time you can ask my opinion. Okay. So now I actually, in my personal finance blog, in the MoneyHans, I use behavioral finance, especially this concept of mental accounting, which has been written into a book called the Wealth Allocation Framework. So what we do there is instead of doing asset allocation, where you're only taking your portfolio, you are also taking your overall net wealth, which includes your house, it includes your FD and cash in the bank, and it includes your human capital. Okay? So now instead of looking just at your portfolio, if you took the overall wealth that you have, you then divide that. And I believe you can divide it into 3 buckets for most of your life.
Right.
One is foundation, which you hide from everyone. Do not even tell anyone that you have it. That's your emergency bucket. That's your don't lose me my money bucket. That stays in cash. Cash, house, gold, and insurance. So I have a big chunk in that. Then you build your long-term wealth by putting your money into a market return and in your skills, 2 pillars. One is your own skill set, keep improving, and one is a market return bucket. That, in my case, is invested in an Asian equity fund, fully in equities, and fully in Asian equities, which means it's technically, I've made a bet long-term Asia will, actually that's not true. I think I did in the end, a few years ago, put in international equities as well. So I think it's half and half. The fact that I don't remember goes to show that I don't look at that statement for years at a time.
Right,
okay.
Right.
The fact that I don't remember. Okay. Literally, that statement comes to me once a year, 3 months after financial year end, and it gets filed in, and I don't even bother looking because it's in the pension environment. I don't have to declare that in the tax return also. Okay. So that's my growth bucket. And then there's the fun roof bucket, which is basically high risk, high return. That's your fun money. Depending on where you are, how young you are, if you invest that in highly speculative things, if it pays off, you are rich. If it doesn't pay off, the rest of your house is still standing. That's the way I see it. And I've put a lot of my wealth right now in my business. This new business, MMI, that I've started, I put a lot of time and effort into that. And then there is a 4th bucket that comes in only when you are ready to retire, which in your case, your audience probably doesn't. In my case, I have taken some of that money and put it into a rental portfolio, which gives me the monthly income so that I can concentrate on building my business because I'm not getting any money in from a salary. So that rental income is coming in. So that's how I've invested. if you were to take percentages, there's a big barbell strategy. In that, there's a big chunk in cash and safe assets. There's a big chunk in highly risky business. And there's this sort of, I want to say 20%, 25% in the market, fully invested in equities long term, which I'm not touching for another 20 years.
Right, correct.
But no futures options, no things like that, no crypto. Okay, don't before you ask me that question.
But why not? Why not cryptos? Why not futures and options? Any specific
Because I
reason?
don't understand it. Because I don't understand it.
Right.
Simple as that. I understand enough to know what they are. I don't understand enough, and I don't, more importantly, I think, and this is if you stay in the market for as long as I have in 25 years, I know what the market beta is and I know what alpha is. Okay. In futures and options and crypto, there is no beta.
Ma'am, can you just explain alpha and beta for the young audience so that they also understand?
So when you invest in the equity market, there's a certain, you can't invest in the market, right? Because you have to buy certain stocks. Some people, if you go to a sabji market and you say sabji aajkal market bhaav upar tha ya niche tha, so you can't start saying अरे आलू ऊपर था and भिंडी नीचे था and मिर्ची sideways था. So what people do is create an index. The index is a Nifty 50, which is 50 stocks, or there's S&P 500, NSE, BSE 500. So 500 stocks, but they're actually 5,000 stocks, okay? But the 500 stocks basically make up 95% of the market. So the market is basically a hypothetical portfolio of stocks.
Right.
Now, ETFs are exchange traded funds which track that index. So you can get the market return very, very cheaply for 0.1% without doing any effort. Simply buy an ETF and put it in your bottom drawer and don't touch it. That is the beta return, and that will give you the market return of that GDP, of that economy. Okay, so if I believe India long term will do 12-13% nominal GDP and the corporate share market will give you slightly 2-3% more, I will get 14-15% beta long term without doing anything, without doing wasting any time whatsoever. I might be a doctor, lawyer, artist, musician, rock star, whatever. I don't have to think about finance. I may not want to. So I will get that return anyway. Now, people in the market, people like you and me, may say we are in the market, therefore we should outperform. That is called alpha. Alpha is basically when you, with your skill set, say that I should be able to outperform. By the way, in no other profession, Morgan Housel makes this point, in no other profession, you can't become a surgeon without going to med school. You can't become a lawyer going to law school. But you can be richer than a finance person. So people like you and me think that we are smarter than the market. Therefore, we should, with our skill set, trading and picking stocks and picking funds, we will be able to add value over and above that market return. That is called alpha. It should be 2, 3, 4% after paying for all fees and transaction costs. If it is not that much, you shouldn't bother. You should not bother. Okay? Mutual funds promise that. They don't promise to you in the documents. In their documents, they say, matlab, we will buy stocks. They don't even say how much they will outperform by. People like me who research mutual funds make them say it on video. Bhaiya, aap alpha kitna daloge? Matlab, how much do you think you can add value?
Right.
After fees. Then they say 2, 3, 4%. Okay? Mm-hmm. If you're not getting that, like I said, go home. Okay? Don't bother. Now, in futures and options, there is no market that I can simply buy an ETF on. I will have to do some jiggery pokeri and some thinking about it. And I, with my limited bandwidth, I have other things to do in life. I don't want to. So I'm saying to you that the reason I choose not to invest in certain asset classes is because the market beta return is not available in those. I will have to study and be smarter than the rest of the market. And I don't have that bandwidth. And it's not needed. It's not needed, okay? For creating your long-term wealth, it is not needed. You cannot say to me that all the other asset classes are not worth investing in and you can only make money by investing in those. No, you don't.
Yeah, makes sense. So I think this is a very good, you can say, takeaway that future option is not needed, because this is a thing that every young guy, he's like completely future option, what is it? I want to make money here. My broker is telling me wahan par double hota hai paisa, to main yahan pe equities mein kya kar raha hu? This kind of a mentality goes there. So ma'am, speaking of alphas, yeah, please.
I was going to say, that's why you need to know the basics. So that's why I have two different sites, right? The reason the MoneyHans exists is to cater to people like, not the people who want futures and options, but to women, to young people who are not in the finance industry and who may have a little bit of FOMO, but not like, oh my God, I need to know this. Okay, I'm catering to them, saying, don't worry. These people who are think that they will outperform, trust me, they will not.
Right.
Ghoom phir ke, they will end up making the same, maybe slightly higher than you, but at least you lived a quality of life. You shouldn't have to spend all your time worrying about money. That's not the function of money. You need to think about backwards. What are we doing this for? What is money good for? In the end, you want to achieve something with that money?
Right.
What is that?
Maybe.
So long as you have that objective in mind, so long as you don't lose sight of that, don't get enamored by somebody else just making a little bit more money in the short term.
Makes sense. So, ma'am, tell me one thing. So, many of our users probably are now very much interested in the MoneyHans. So, tell us more about the MoneyHans and the benefits a person if he goes there. So, what all he can get or what all resources he can get through?
He or she, right? So, basically, the MoneyHans is my attempt of taking everything I know about finance and then saying, what does the person who doesn't want to be in finance, what does that person need to know? So I take only the essence of the information, the analysis and the behavior part and condense that in a simple to consume package for the lay person. So I'm saying it might not be for you, but it might be for your mom or your friends who are not interested in finance. So the idea is, what do they need to know to achieve their goals? So they have financial planning goals, right? They say ki mere ko ye karna hai. How much do I need to save? Where should I invest? How should I divide it up between mutual funds and should I go active or passive? How much in equities, how much in bonds, how much in real estate? All those answers they will get on that site. And right now it's all video and podcast content, but I might team up with maybe a robo-advice platform where I think things are starting to get complicated about tax and up to a certain age, I don't think you need to make it complicated. Until maybe about age 30, 35, you don't need to make it complicated. But once you start sort of earning more money and more tax and all that stuff, then we could go and do something more complicated. So anyway, that's what MoneyHans is. And MMI is more for the professional market. Okay, that's for people in the wealth and asset management industry.
Alright, so I can categorize like the MoneyHans is more for the people who are beginners, who are not completely into stocks or let's say finance world, and MMI is more for professionals completely into it, right?
Yes.
Right,
yes.
Perfect. So, ma'am, two things. So, we talked about alpha and a very interesting word came in robo and I want to ask some questions here. So, to get alphas, first I want your perspective or your opinion on the real estate sector, because I feel this is a really interesting sector which I feel right now, and at least from the ground up. So from the very ground, I am now seeing a lot of interest in at least in Delhi and Noida for real estate. So what do you think? Any opinions here?
Okay, so real estate is a real asset. So unlike equities and bonds, there's no index. Okay, there's no one national index that you can invest in. So there's no beta. Okay, so when you get the return from real estate, it is alpha and beta combined. Now, I think when you buy one property, you are buying like one stock. In equities, you wouldn't just buy one stock because you could be wrong. Unfortunately, in real estate, because the transaction costs are too high and it's lumpy asset, you end up buying one apartment or one shop or one whatever. So you have to, in my book, unless it's the house you're living in, when you buy real estate, it's either for rental income, which goes into the income bucket, or it's the high risk, high return bucket, which is the speculative. Now, when, for example, I look at a property with the intention that, I know something that the market doesn't know, like there's a rezoning, something is happening, okay, or there's a new ceiling coming up, or there's a new school coming up, something that is coming up in that locality which will change the demand supply equation. Either there's a new development coming up or there's a new demand coming up. Okay, something or the other is coming up there that I know that nobody else knows. Okay, that to me is speculative because you are wanting to get a valuation, like a re-evaluation, like you would do in equities. You're going from a PE multiple of 10 to PE multiple of 20, right? That's what you're expecting in real estate. To me, that is high risk, high return because, and people do this with Goa when the airport was about to come up or something. That's different from buying a property in a very established suburb where everyone knows it's established, which is, for example, where I am sitting right now is just off Carter Road, which is basically the suburb which is the seafront closest to the CBD. CBD being the BKC, which is the Central Business District in Bombay, right? So this locality is well established. All the film actors live here. Many CEOs live here. Expats live here. So this is not going for a re-evaluation. We know what the rental yield is. My point is, depending on which type of property you've gone for, I would put it in a different bucket. And however, the valuation is pretty much the same, which is ideally DCF, but multiples or yield is a shortcut way of evaluating real estate. So if I see real estate in Bandra yielding 1%, I think I compare that to my borrowing rate and I say this is expensive. If my borrowing rate is 9 and my yield is 1, this market is expensive. If I see a property somewhere else and I see the yield at 5 or 6% and borrowing rate is 6-7%, it's a tiny gap. To me, it's worth looking at because the rental yield is closer to the borrowing cost. So gearing makes sense. Leverage makes sense. So what I'm saying to you is that in any market that you're looking at, you need to look at what kind of property you're buying. Why are you buying it? Is it core? Is it opportunistic? And what the valuation is at that point. How can you afford to be wrong?
Right. So
how wrong can you afford to be?
Yeah, exactly. So ma'am, one more thing that you talked about DCF. So again, this is also a very interesting question, which I feel you are in a great position to answer. Is DCF actually usable for a retail investor or a normal person who's investing to actually see the market? Because there are some assumptions which has to be taken in the formula itself. So is that really useful for the general people out there?
No, it's not. But it is for you, no? It is for your advisor. So a general person will use a heuristic, a shortcut. Okay, so a P multiple, like a yield, what I just told you, right? Which is what, again, in the MoneyHans, I would have given exactly this example. Ki if the difference between the borrowing and the yield is too high, that means the market is too expensive. This is a shortcut way of doing a DCF. But if I am a market practitioner and you are a market practitioner, you and me will do the DCF before we tell this person to go and explain to them why. Now, in real estate, I think most people will understand it. If you put all the rental income into a spreadsheet and then all the repairs and society cost and strata cost and everything you put into a spreadsheet, you can make this person understand कि यार इतना कुछ करने के बाद आपका return क्या होगा. Okay, some assumptions I agree you need to make, but the point is that because they understand the cash flows, they are able to understand it. So I say to you, maybe to the lay person, they may not know it, but they should. And certainly their advisor should make them sit down, and at least for real estate, they should show it to them.
Correct.
Because, when I was an advisor at the age of 21, okay, I told you 2 years I worked as an advisor without salary, right? Back then, I put real estate for most of my clients, I put it into a spreadsheet and I showed them that the average return that they were getting on their real estate was something like 2-3%, which was nothing compared to what the expectation was from equities. And I say to you that I recently interviewed a private banker who said exactly the same thing. There was a portal that they had launched, private bank, They were doing it for their HNI clients, which these are very rich people. Okay, they've invested crores and crores and crores. And they were surprised to hear that when the DCF was done on their portfolio, that their return the IRR had been like 3-4%. They themselves did not know, because the thinking is, मैंने इतने साल पहले लिया था कार्टर रोड पे इतने लाख का, अभी ये 90 करोड़ का है, तो मतलब मैंने बहुत पैसा बनाया होगा. It's only when you put it into a DCF, you realize, yeah, the return was only 10%.
Correct.
कौन सा 30 मार लिया, मतलब क्या कर लिया you? So I'm saying to you that by not doing DCF, you don't even know what returns you've got.
So, ma'am, one more thing that this is a question, and very common question. Again, I have lots of common questions. So, why do people tend to make more money in real estate but not in stocks? General people, the retail people.
Okay, so why do they? Now, firstly, I don't know that they do, frankly. I don't know that they do. So that's an assumption you've made in that statement, okay, which we don't know unless we go and look.
Right.
Assuming it is true, assuming that that is true, there are 2 reasons why that is possible. One, because they are borrowing. Most times when you buy real estate, you put the deposit down and you are actually leveraging 80%. Right? You're borrowing from the bank. And why is the bank giving it to you? Which is the second reason, which is basically because it's a lumpy asset and there's transaction costs and stamp duty and all that stuff, you eventually don't sell it for a long time. People don't flip it every year. Okay? Whereas with stocks, abhi maine kharida hai, kal kharida hai, aaj dekh rahe hain, oh my God, it's up 1%, oh my God, it's down 2%, abhi ye hua, abhi wo hua. So we think that it is a development, a good thing that market prices are available to us every minute. But if I ask you, somebody came to you on a minute by minute basis or daily basis even and told you, तुम्हारा घर में ना आज 1 crore दे रहे हैं. Okay, tomorrow I will offer 1.2 crores. Tomorrow I will offer 80 lakhs only. If those swings got told on a daily basis, would you not panic?
Of course I would.
You would. So I'm saying to you that the reason people make more money with real estate is because they do borrowing, which can amplify returns and obviously bring it down also. Most of the time it amplifies because of the second factor, which is basically you end up holding on to real estate for a long time without looking at the value every day and therefore not panicking. So that forced holding period makes the leverage work for you rather than against you. In equities, because of margin calls, even if you didn't look at it, your bank looks at it. If they have borrowed against security, so they will call you. If you haven't, they will call you and say, "Abhi margin call ho gaya, abhi." So there is a structural difference in the way leverage can be used.
Makes sense. I think that's a very logical answer because, of course, when we see the numbers going up and down, any person can go haywire, right? So, ma'am, in my experience in stocks, what I've actually understood that in stocks, it's not more of doing the correct thing, it's avoiding the wrong things, the mistakes which have already been done. So according to you, from a money management perspective, what are the biggest blunders you've actually come across, and what would you advise other people who are watching this video to not do ever?
Oh my God. So the whole list of behavioral biases that have been very well documented, I see it on a daily basis. I mean, for example, you just made a statement, okay, real estate mein zyada banate hain. Okay, that's a availability bias because people around you have made money from real estate. So you think, therefore, people make more money. Okay, that's not a given. So like that, whatever is available to us, whatever we read in the papers is what we think is the case. People have this recency bias, okay, which is basically the fact that, which is what in local parlance is called FOMO, right? Fear of missing out. So I see somebody else around me making a lot of money, my best friend or my brother-in-law or whatever, and I feel like, okay, I need to do that as well. Not knowing that, I mean, people have their own games, okay? So all of this, by the way, this book that I mentioned to you, The Psychology of Money, has documented it quite well, actually, with good stories and good examples. But yeah, I see that every day. I see them not diversifying enough. Sometimes I see them diversifying too much. For example, they're putting 20, 30 mutual funds in their portfolio. That achieves nothing. You're paying 2.5% fees and you're getting market return, which is stupid. So you need to understand what a mutual fund is. And I also feel even professionals are not helping. I see many professionals, many YouTube financial influencers saying X many mutual funds are enough. ऐसे बोल रहे हैं जैसे मतलब like it's like they have done no research as to why there should be enough. Why you need fewer funds for large cap and you need ideally more funds for small cap because the dispersion of returns is higher. But I see regularly professionals, experts who are well regarded recommending the opposite. They recommend more in large cap and fewer in small cap because the absolute allocation is lower. So what I'm saying to you is that there is not enough research being put into how to construct a portfolio. I believe there is no such thing. I mean, there is a such thing as an efficient frontier. Obviously, we've been taught that. But I'm saying to you, for practical purposes, it is useless. Okay, for practical purposes, you do not know the expected return, expected correlation, and expecting whatever. So therefore, common sense works. And most people have common sense. But I feel like I said, either their advisors or television or mutual fund sahi hai campaign or whatever sometimes works to the detriment and tells them to do the opposite of what they do. So yeah, I also see them not buying insurance. Okay, so they basically go and start investing all their money, not having insurance and not knowing that most people in the US, even in India during pandemic should be a good wake-up call. Most people get pushed into poverty or bankruptcy because of one medical accident. Okay, either an accident or a diagnosis can push you from you think you're well off to having nothing and in debt. Again, I mentioned I started this interview with my father. He died. He at one point was very well off. I used to buy Mercs every year. And another point, he died penniless in debt. And I had no money to buy his medicine or buy food for myself that day, and I was 20 years old. So I'm saying to you that not thinking through what can go wrong in your life, you think all the bad things can only happen to other people, not to me. Even if they don't happen to you, they can happen to your family, they can happen to your best friend, and you should be there for them, right? So I think not being financially prepared is something that I just don't understand. I don't understand what they're thinking. I mean, maybe I'm paranoid because I've lived through really bad times. So maybe I'm the other extreme, and that's why I've chosen to be in this profession. But most people I see are not even reasonably prepared. My best friends, ठीक है अभी पैसा आ रहा है चलेगा जब तब की तब देखेंगे retirement की तब देखेंगे. You're already in your late 40s, you're touching 50. What do you mean तब की तब देखेंगे? You only have 10 years to live, for God's sake. 10 years to retirement. You can't assume that you will have your health, your mental health and your physical health forevermore. I think these basic things is where people go wrong, rather than getting enamored by which stock, which mutual fund, which FNO, which whatever, which crypto. For God's sake, every time I do a webinar nowadays, I get asked about crypto, which is such a small part of the world in terms of where the world is. For crypto to be a currency, there lot needs to happen in the world for this to be a mainstream asset. Okay, so you are spending all your time in something that is so minute, so volatile, where you have no information advantage, no analysis advantage. Why? Why are you wasting your time and effort studying that when 99% of your wealth is not invested correctly? So I find, those are mistakes that people need to fix rather than going after the nth.
I think, ma'am, that's a very good point for insurance. But does that mean that maybe insurance sector might be a good sector to put your money in? Because as we see that, of course, in India, the awareness of insurance is not as good. So probably like nowadays for the past 3-4 years, the awareness of stock markets is actually into it, and people are now started to invest a little more. And it's very clear by the amount of demat accounts which have been opened in the past 2 years. So do you think that investing in this kind of a thing, like using your common sense, using your surroundings, and then making a small investment decision, so does that make sense or not?
So that's a very Peter Lynch philosophy, right? That, oh, I went to the mall and I saw this being bought a lot more, and therefore I should look at it. I think that's a good way to back up your hypothesis, to see whether what you're seeing in the spreadsheets, if you are picking stocks yourself, will Amazon do well, or will Flipkart do well, or whatever. I mean, I'm just picking some names, okay? With Zomato doing well, okay? So you see people are your friends using Zomato a lot, so therefore you think Zomato will do well, whatever. I think that's okay, but it's a very small sample size, okay? So I think you asking 3 people around you is not enough evidence of anything. Okay, it might just be in your segment, in your strata of society, does not mean that everybody else is doing the same thing. So I think if you are going to be a financial analyst, it's not enough. And if you're not going to be a financial analyst, then to bilkul nahi. Don't go by this. So I think it's a nice thing, but no, I don't think that you should base your investment decision based on 2 or 3 data points. Coming back to insurance, I think understand that obviously when you buy an insurance stock, and you buy insurance, you are on the opposite end of that transaction. So I'm saying to you, buying insurance stocks is not bad. Warren Buffett got rich based on that. But because he has billions, okay, he is not going to be short of medical expenses anytime soon. Okay. So first, you buy insurance, right. Buy health insurance, buy life insurance, buy income protection. Then you can think of buying insurance stocks. Okay, I'm saying to you that make sure you have insurance, whether you, your parents, your family, floater, someone has insurance. Then you can start building your house, which is, I told you, foundation is where insurance goes, cash in the bank, emergency cash. Your equity portfolio, like mine, should let run for years. You should not unnecessarily interrupt the compounding machine. That's what Warren Buffett did. That's what Morgan Housel is saying. That's what I'm doing way before I knew these people. I mean, Warren Buffett I knew, but anyway, the point is that every good investor lets their portfolio run for the long term without interrupting it, which means you need to have enough cash outside your portfolio for a year or 2 to be able to survive. If you have to sell your portfolio just to pay your medical expenses, you will be forced to sell in a downturn. Okay, if khuda na khasta, pandemic started last year, market is down and you need the money for a medical expense, you are hit by a double whammy. Okay, that's what you should be avoiding. So think through your portfolio in terms of, I think the simplest way, like I said, the buckets is the matching time horizons. Short term goes into foundation, Long term goes into fully into equities, and medium term is in a balanced fund or whatever. And then the high risk, high return is like fun money.
Right, right, right. So, ma'am, about compounding and the long-term returns. Oh, so I'll tell you this particular thing. So I was walking with my friend recently here, and I was telling him that of course you should start investing. You're pretty decent. You're doing pretty well. So you should start investing. And he's like, you tell me, put my money for like 20 years, 30 years, 40 years. Keep it in stock markets or any asset. So what is the point of even compounding the money and getting it after like year 60, the age of 60, and not even enjoying it? Or probably I would just go ahead and travel right now and spend off the money right now instead of just having piles of money when you die. So what do you think about it in your opinion?
I think you need to do both. Okay, it's like anything in life. You need to do a little bit of living in the present and living in the future. You do one or the other extreme. I agree. So if you only live in the future and you are a miser today, then that's not good. But if you only live in the present and you don't save for the future, at some point you will get old. Okay, don't assume that it happens to other people and it won't happen to you. So I think if you save 30% on average for all your life, roughly 30%, I'd say put it in these three buckets. Put it in the, firstly, okay, take a step back. Out of your 100 rupees, if you're earning, if you have a job, out of 100 rupees, 50, maximum 50 should be in your need to have. So rent, utilities, khana, vana, sab kuch mila ke 50%. Another 20% should be in wants. Going out, buying your iPhone, buy whatever, depending on obviously where you are, but have fun. So that 20% is have fun. 30% you should be saving, ideally. Okay? 30% may save 10% for emergency, 10% for medium term, and 10% for long term. So when I say compounding machine long term, it's only 10% of your income that you should put into an equity fund and let it run. And ideally, you shouldn't need it. But obviously, if you're buying a big thing in the middle, like you're going and buying a house, and you're 20 years old now and you've let it run for 10 years, and at 30 you're buying a house, for example, then you've had a good 10 years of compounding, no? So when I say 10 long term, I don't mean completely from here to retirement. Although if the reason markets like Australia, America, even in India have a compulsory pension plan, why they do this is because they're hiding the money from you only. So the reason they make you save 12.5% in India, I think it's about 12% there in Australia now as well, in your pension account is because you cannot take it out until age 65. So you might as well fully invest it in equities. So the reason they make you do that is because, as you said, the temptation to live and use it would be too high. The problem is that if you get to 65 and you haven't saved, the governments cannot give you a pension anymore. Not in developed markets. Forget in India. India mein to kabhi tha hi nahi. So it's a little bit of both. Okay. So does that make sense? I mean, I'm not saying all your money you should save. I'm saying of your savings, take one small part and invest in equities. Why? Because if you save in your early years, that compounding machine will work for you. Then you can stop also. After you get married and have kids and you can't save anymore, for example, there will be a period of time, by the way, it goes through everyone's life. Everyone goes through a phase of life where they're not saving. But that's why when you can save, you should, no?
Right, makes sense. Exactly, that is the thing which I said, that at least my point which I told him, that I feel little safe if I have that much amount of money, and it really helps me to take risks or do what I want and not just run behind money. So I feel that is a small part which and that is why I save a little too much than regular people. So that is, yeah.
I do as well. Same thing. I think people have made it sexy to have a nice car or nice phone. I am saying it's even sexier to basically say, मेरे को काम पे नहीं जाना है, okay? Or FU. The reason, by the way, it's called the FU money is because that's what you get to say to someone if they're not treating you well. If you have money in the bank, that's the money if you have in the bank, you get to say to someone, FU, okay? I am not taking this job, or I'm not staying in this marriage, or I'm not staying in this situation because I have money that I don't have to put up with the bullshit.
Right.
Trust me, most people around me don't have that luxury to be able to say that. Actually, that's not true. I mean, I am friends with some reasonably rich people as well. They are making money for a very, very different reason. They have the status thing, right? They want to be well known. They might give money away by the time they die, but they want to be I don't know, whatever. As Warren Buffett, for example, told his wife he wanted to be the richest guy in the world. He got there, but you know what? He lost his wife in the process. I mean, is that something that you want to do? Is that something you want to emulate? So I'm agreeing with you. You have to find the balance in your life. You have to figure out कि क्या करना है. Which depends on, by the way, on how much goodwill you have with your family and friends. So if you don't have money, okay, do you have enough friends and family to help you out? If you have that, then yes, you can afford not to have that much cash. So I think there is a bank. It's a combination of money in the bank and goodwill in the bank. You have to make deposits in both.
Right.
Makes sense?
I think, yeah, that's perfectly fine. I think you should have a balance of everything, of course. So money management, when we say about money management, earlier thing was like 15, 20 years back, at least in India, it was like saving. Now it's more like saving and investment. Money management is not just saving. It is investment too. So is there any third thing, or it's just saving and investment?
And insurance, remember?
Yeah, insurance. Correct. Perfect.
Which in India is considered an investment, right? And people who only think about insurance when it's tax time and because they're getting a tax deduction, 80cc mil raha hai, isliye insurance lena hai. They're not buying insurance. They're basically buying a ULIP.
Correct. Exactly.
And that's putting money down the drain. Okay, so no, don't mix investment and insurance. Keep the two separate.
Ma'am, tell us more about ULIPs and why your opinions on it, or maybe if any person who's watching this and he has ULIP, what would you advise him?
Take a look at it. I mean, I can't pass a blanket judgment, but in all my career, I found that the people who do insurance are not necessarily the best at investment also. Not necessarily. I'm not saying they're bad, but they're not necessarily good either. So if you are investing, remember when you are investing in ULIPs and or mutual funds, you are paying 2% fees for active management. So you should get outperformance, alpha. If you are not going to get that outperformance, you might as well buy a very cheap ETF and buy a very cheap term insurance. That's what I do. That's what most people who are in the industry buy, cheap term insurance and cheap ETFs. Only when you think you can get better outcomes should you pay for that extra. In ULIP, you don't even get the star ratings and the evaluation and the research of the mutual funds available, of the investment component embedded into the ULIP.
Right.
So you don't know even whether you are outperforming or not outperforming. I think that scrutiny is just not there. So therefore, I'd say it's not a good idea. But if you have it already, show it to a financial advisor. They will look at it, compare it. And then if the break cost is not too high, then they would probably recommend to get out of it and buy a mutual fund instead.
Makes sense. So yes, ma'am, I think we've covered quite a lot. And I at least have learned quite a lot from it. And I'm sure that our audience will definitely.
Thank you. So yeah, I don't know who your audience is. I just realized that I've been shouting and my mic has been going high, so you need to probably reduce the sound. Anyway, I'm saying depending on who your audience is, I would say that just always start with your goals. Always start with why are you doing this. If you are doing this to lead a happy life, first figure out what makes you happy. If finance is, chances are the people who are watching this probably like finance. That's why they're watching it. People who don't like finance probably wouldn't be watching or listening to this podcast anyway. But even then, so one, if you're not the finance person, then to keep it very, very simple. If you like finance also, have the humility to accept that you need to outperform over a long period of time before you delude yourself that you have skill. There are many, many people in the world who have done this for a very long time and say to you that it is not something that is a given. At small amounts, you may end up outperforming, which is a good thing. Have fun. Please enjoy. I think investing is a good learning curve. So if you're doing this to learn and have fun, great, do it. But if you're doing this to secure your future and build a big asset, there are cheaper, simpler ways to do it than try to be a finance expert. Then you might as well do it properly and go and read some books, teach yourself, and then do it. So do things that you're actually good at.
Yeah, perfect. I think, ma'am, that's a great message. So again, if you're watching this, so probably you've got a lot of value from it. And if you want more value, of course, you can always go to the MoneyHans. We have a YouTube channel, we have a LinkedIn page and Instagram, right?
Instagram, Twitter, Facebook, sab mein hai. I'm about to revamp it. And yes, so all of them are there, but it will be all consolidated on the website, which is themoneyhans.com. I have a few calculators and things that I'm putting in there, which for the non-finance people will be very useful.